So the people that hold Bitcoin over time, if you're holding stable coins and your neighbor is holding Bitcoin, you're going to look over your neighbor who's living a good life, going on multiple vacations, and then you're going to continually get poorer over time. And eventually you're going to be like, well, why am I holding these stable coins? Even if they're faster, if in the shiny wrapper, I should probably hold some Bitcoin as well.
What's up, guys? Today we've got Sam Callahan here, and we got a great episode for you. We talk about global liquidity. We talk about why Bitcoin is so sensitive to it, what Tudor Jones is talking about, how corporate CFOs are putting so much Bitcoin on their balance sheet, and why they're going to start realizing that dollars are liabilities and not assets. Then we get into what's going on with interest rates, what the Federal Reserve is thinking, and how you can get smarter on a daily basis, where Sam gets his information and where you can too. I really enjoyed this conversation, and I think you guys will learn a lot from it. So here's my latest episode with Sam Callahan. I thought a great place to start is you did this report with Lynn Alden about Bitcoin and its relationship to global liquidity. It's a good time to talk about this because global liquidity seems to be increasing. M2 money supply is expanding. They're making capital cheaper. Why do you think Bitcoin is so sensitive to global liquidity compared to other assets?
Yeah, I teamed up with Lynn Alden on that report. And the reason why we thought, it was like our hypothesis that Bitcoin would be the most sensitive, and that's what we found. But our theory was that other asset classes, there's different factors that drive the prices. So for instance, like equities. Equities have like dividends and earnings, that it's not just liquidity driving their the price action, as well as they have a structural bid from like retirement accounts, right? 401ks. So even if liquidity gets drained out of the system, that passive bid can kind of buffer those prices up. So it kind of distorts its relationship with global liquidity. And that's just equities. Gold, similar, has like a mixed relationships with liquidity. It's scarce. It benefits from pro-liquidity environments, but it's also seen as like a safe haven asset. So when liquidity gets drained, prices fall, people kind of flock to it as a safe haven. So it's not just a pure, correlated asset to liquidity either. Now, Bitcoin, risk assets tend to do better in pro-liquidity environments. Investors kind of move further out on the risk curve. Bitcoin in today, I think other people disagree, but it's broadly seen as a risk asset still. And so it's going to benefit from poor liquidity environments. It doesn't have earnings or dividends driving its stock or price like stocks. And so it's very purely correlated to liquidity, or so we thought. And so all those things, it's global as well. Like if you look at like emerging market stocks, for instance, they could kind of break with liquidity as well, because they can have like very specific events happen in their economies that kind of are specific to them. So some kind of currency crisis, economic crisis, natural disaster, something like that could kind of help break that liquidity condition. Whereas Bitcoin is just this like global asset, right? It's also very scarce, fixed supply. So it's very small too still. So it's going to get thrown around more than other things with like the waves of liquidity coming in and out. So for all those reasons, we thought that Bitcoin would be the most pure barometer of liquidity conditions. And that's actually what we found with the data as well.
So if we go back to 2021, obviously, interest rates are at 0%. We just printed trillions of dollars. Asset prices were at or near all-time highs. And the Fed comes out and says, we're going to raise interest rates. They end up doing it at the fastest pace in history. Yeah. I think every person that is in the investing world would say, obviously, asset prices fall and stay down until we start to cut interest rates. Instead, what we saw was Bitcoin, stocks, and many other assets. They did fall initially. But even though rates were still above 5%, they all came back at or near all-time highs. Yeah. And so you have the S&P hitting new all-time highs. You have Bitcoin hitting new all-time highs in a high-rate environment. Why is that happening, or why did that happen?
Well, I think there's a couple different factors. I mean, for one, we do live in this environment where the fiscal policy just kept spending, right? I mean, this is like the fiscal dominance.
Politicians didn't get the memo?
No, they didn't get the memo. And so in this period of like fiscal dominance is what you call it, as interest rates rise, it actually widens the deficit more. And so this is when typical monetary policy tools that are used to fight inflation, to combat it, actually do the opposite. It's like this backwards, where the fiscal deficits get so big that it's actually the main driver of inflation. And so if the interest expense is increased as the Fed keeps raising interest rates, well, that's going to be a problem, right? That's going to keep things elevated. Another thing that was happening was you had kind of, as the Fed was engaging in, say, quantitative tightening, there was like offsets happening, right? There was the reverse repo kind of getting drained down. There was also the Treasury general account that Yellen was kind of manipulating to kind of add liquidity to the system as well. So that was kind of buffering asset prices. And so there's kind of these offsets that were happening at the same time that I think was kind of purposeful, because they didn't want everything to get drained right at the system and everything to fall right away. They wanted to kind of try to have that soft landing that they always speak about. And so those are the different reasons, I think, why, even though the Fed jacked interest rates at the fastest pace, you still saw asset prices kind of perform well in that environment.
As they cut interest rates, is it as simple as interest rates go down, asset prices are going to continue going up, or are there other things to consider, whether it's Bitcoin or stocks?
Well, I think, yes, I think when they cut interest rates, now borrowing is going to get cheaper. I think that's just generally good for liquidity. And it's not just the Fed doing it, right? It's central banks around the world. It's the ECB, it's the Bank of England, Bank of Canada. They've all started cutting rates. You have this coordinated action once again. And so I do think as they cut rates, that's going to make borrowing cheaper. It's going to flood the market with more dollars, because that's how dollars are created in this system. And asset prices are going to perform well. I think it kind of is that simple.
And the U.S. is cutting rates, but also we're seeing a number of these other central banks start to do that. How much emphasis do you put on global liquidity from the United States contributing to other places, and also those interest rates? Is it a U.S. story, or do you have to, as an investor, look at global liquidity is global for a reason, right? And also those interest rates kind of around the world obviously are at different levels depending on the country and the individual economy.
I think it is a U.S. story. I mean, it is the largest global economy. We are the Federal Reserve, dictates the price of money. The dollar is the global reserve currency. And so I think that's where most of the focus is on. I mean, everyone's kind of focused on China and kind of the stimulative activities they're doing there. But I mean, that's very different than if the Fed came out and did something similar. I mean, that would cause the market to really react to it. So I think that's the main story. I think you should focus on what the U.S. is doing. And the Fed is kind of signaling that, okay, this is a pivot. I think everyone was focused on, is this a 25 basis cut or a 50? But really the trend is clear. And we're in this regime change where the Fed's now easing monetary policy where they were tightening before. And that's good for liquidity conditions.
And when we look at, let's say, companies, they have these balance sheets. You've previously talked about there's kind of two different playbooks that they need to be aware of. One of them is holding cash, and one of them is holding Bitcoin. Obviously, the dollar-based strategy seems to be the same as an individual holding the cash. They just get devalued over time. Mm-hmm. What is it going to take for more and more people to realize that this Bitcoin strategy is actually something that can be used inside of corporations and done where it can actually be good for shareholders?
Well, I've been asking myself that, because you look at MicroStrategy, I mean, it's insane that another corporation hasn't followed suit right now, because you just look at the stock performance since they've adopted a Bitcoin corporate treasury reserve strategy. I mean, it's crazy. They've outperformed every single stock in the S&P 500 at this point. And so I think, when it's in it's kind of a change in thinking for these CFOs and these treasurers to really think about, a dollar is no longer an asset, it's a liability. And they really need to think about that. And when you see Michael Saylor, not just think about it, but then say, oh my gosh, we're going to put $500 million into Bitcoin right away. I mean, that just takes a very innovative thinker to identify that, but then to actually execute a strategy. I think you're starting to see kind of a change in thinking. You see some companies on the margins, like the Metaplanets of the world, One MedNets, Semler Scientifics start to do it. And I think they need to be founder-led teams. Bill Miller talks about this, founder-led teams. You have to think about the corporate governance, if they have the power to even implement a strategy like this, or if they're going to get a lot of pushback from the board or from their investor base. They have to be really good about investor relations, of why they're doing it, and looking at their balance sheet, saying, okay, this is actually how we can get a competitive advantage over our competitors. And having a case study like MicroStrategy now, where you can point to and say, look at what it's done for this company, not just from a performance standpoint, but culturally, the entire narrative around MicroStrategy is completely shifted, right? And so I think now that we've seen that, it's going to be this is kind of the cycle where I expect to see a lot more corporations started to get in here. Yeah.
So if more and more companies are going to do this, is it something where you just buy Bitcoin, leave it on the balance sheet? Or is it going to be something where it seems like Michael Saylor has said, hey, I'm going to buy this, put it on the balance sheet, but now I'm going to almost go on offense. I'm going to start borrowing capital. I'm really going to go try to acquire as much Bitcoin as possible. Like, how do you think about offense versus defense with Bitcoin on the balance sheet for, the average corporation where they may say, hey, we believe the Bitcoin story, but we're not necessarily going to go and become the, Bitcoin company, as I think maybe Michael Saylor has done.
Well, I think that's like this. When you get into Bitcoin as a corporation, I think that's a decision you have to make. But I think most are going to just be on the defensive side. They're going to say, hey, we have an opportunity to kind of diversify our balance sheet a little bit to protect ourselves against inflation, as well as maybe rising geopolitical uncertainty. A small allocation goes a long way. River put out a great report that said, if you have 2 to 3% of Bitcoin and the rest cash, you will outperform the rate of inflation. And so a little bit goes a long way when it comes to Bitcoin. I think a lot of corporations will probably take that more conservative route. Now, the ones that really get it, that really can put on some of these more aggressive strategies and say, okay, no, we want to acquire as much Bitcoin as possible. I think, again, you have to be kind of like a innovative, led by an innovative thinker with the power to do something like that. And then you have to have the access to the capital markets. I mean, you have to be able to raise debt both through the debt markets and the equity markets, and then to implement that Bitcoin strategy. That's just ultimately a choice. I think you have to have a lot of conviction to put on something like that. But I do think more and more people will do that because, you see this with Mara too. They put on their HODL strategy and now they're doing the same thing. They're entering the convertible debt markets. And if you think about mining, it's one of the most competitive industries out there. And what's one competitive advantage that I'd say Mara has over other miners? It's the liquidity of their stock. It's how big they are. So they can actually go access the capital markets and put on a strategy like this, whereas smaller miners can't. And so they have that competitive advantage and they're leaning into it. And they're going to start, hey, we're actually going to put on this HODL strategy. We're going to put on the MicroStrategy playbook here. And if we're right, especially with the timing, then down the road, we're going to have a much bigger competitive advantage over somebody who did not do that. So I think it's just a matter of, where you are, who you're led by, what you're able to do, whether you want to be more on the defensive side of things or the offensive. But I think it always starts with that first step, and then maybe more and more will people do the MicroStrategy playbook.
How about private, like small businesses, right? One of the things that people have reached out to me over the years, they're like, cool, I see what MicroStrategy is doing. That's awesome. They're publicly traded company worth, billions of dollars. I run X local business. I have half a Bitcoin or a full Bitcoin on my balance sheet. What should I be doing? Like, is it the same thing? It's just like, hey, keep stacking Bitcoin and, kind of use it as that defensive thing? Or do you think that kind of size matters and maybe public companies versus private companies or big companies versus, kind of small or medium-sized businesses, there's something different that they should be thinking about when it comes to Bitcoin?
Well, I think for somebody like a small business, every single one of these businesses have the same problem, which is like if they're going to, have cash on their balance sheets, then again, it's a liability. And so they want to hold some Bitcoin that actually will appreciate in value and protect themselves against currency debasement, then I think they should do that. And I think, they don't have to do the whole MicroStrategy thing where you have to keep raising money and leverage your business to do something like that. Again, that's like your own personal risk tolerance and whether your business can handle something like that, because obviously leverage has to be intelligent leverage is how Michael Saylor describes it. But a lot of these small business owners, I think it just makes sense to put them on their balance sheet and, instead of their cash, but make sure that they have like a working capital threshold to, keep their business running operationally. And then anything left over, they can kind of put it into Bitcoin to save more long-term. And then they can use that Bitcoin down the road. It's just a way to save. So they can use it to, reinvest into the business down the road. But until they make a decision of how to allocate that capital, it makes sense to hold it in Bitcoin instead of something that's going to lose value, right? So that's how I think of it as like a small business owner. And going back to that same River report, they say they're seeing a ton of uptick in their customer base of small businesses. So people are doing this. They just don't get the headlines of the MicroStrategies or the Maras of the world.
Well, it's not as interesting if the local restaurant does it compared to MicroStrategy doing it with billions of dollars.
Yeah,
right?
No, but that reminds me of, I was just actually talking to a small business owner, and they own a restaurant up in California. And they've been doing this since, I think, 2018. So really good time to get in back in 2018. They said that their Bitcoin holdings is now worth more than the entire business.
Yeah, it doesn't surprise me.
Yeah, which is crazy, right? So that just shows like how impactful a Bitcoin strategy can be to any business that adopts it.
Yeah. Paul Tudor Jones recently came out and he said that all roads lead to inflation. He's long gold, he's long Bitcoin, he's long some commodities, and then he thinks that the NASDAQ is also serving as some sort of inflation hedge for young people. Do you think corporations will buy into the inflation story? Like, let me get some Bitcoin, but I'm also going to maybe get some gold or some of these other inflation assets? Or do you think that this is really a Bitcoin only story? And obviously Michael Saylor and MicroStrategy just bought Bitcoin. We've seen Metaplanet; they're just buying Bitcoin. There's a couple of other companies that have started to do this. I haven't really heard of anyone being like, I'm going to buy some gold and Bitcoin. But do you think that CFOs and corporations may actually take more of a Paul Tudor Jones approach and say, let's build an investment portfolio of kind of inflation hedge assets?
Yeah, I mean, I could see that happening. I mean, especially again, if they see Bitcoin as just like one, part of a more diversified portfolio, that would make sense to me. Now, gold has its problems, right? I mean, it's physical, it's harder. So these companies, they can only buy a certain amount of securities before they have to reclassify themselves as an investment company. I think it's 40%. So if you want to play gold and have an ETF, well, okay, but that's a security. And so if you want to have the NASDAQ, that's a security as well. And so that's one of the things that Bitcoin offers these corporations is that it will never have to reclassify. They can hold as much Bitcoin as a percentage of the balance sheet as they want because it's a commodity. Now, if they want to buy real gold, I mean, they could do that as well. That's a commodity, but again, it's physical. I mean, they have to deal with all the logistics of getting the physical gold and storing it and securing it. Bitcoin being digital makes it a lot easier. But yes, I do think that corporations will probably start to diversify because up to this point, from my understanding, most CFOs and treasurers, it's pretty simple. I mean, that they're just like, we're in treasuries, right? We're in cash and cash like equivalents. That's our balance sheet. It's just now that they're starting to think about these risks really since 2020 when inflation started to ramp back up really quickly in terms of the CPI, because that's really what they track, right? I think Bitcoiners and gold bugs, we kind of look at the empty money supply and other measures of inflation. But now that CPI's ramped up, the cost of living is increasing, their costs are increasing. And so now these CFOs and treasurers are starting to think about, okay, how do we protect ourselves?
Now, there is something called reverse Thiel's law, which is basically like bad money flows to good money, right? Mm-hmm. Or capital flows from bad money to good money. And so there's this idea that like Bitcoin was going to take away economic value from dollars. It's kind of like fiat currencies are bad money. They get devalued. Everyone's going to go to Bitcoin. One of the things I've been thinking a lot through is like, well, stablecoins are pretty popular. And it's kind of this like new wrapper for the fiat money. And so it almost feels like Bitcoin and dollars are winning together, in maybe it's a short-term thing, maybe it's a long-term thing. Like, how do you balance, maybe the Bitcoin critics are like, oh, Bitcoin is bad because it's a threat to the dollar. But actually the data points seem to be like, well, the dollar seems to be doing just fine, on these new digital rails, and Bitcoin obviously is doing well as well. Yeah.
I mean, the stablecoin growth over the last 3 years or so has been crazy. I think it's over like $450 billion now. I mean, there's clear demand there. That's like if you point to like crypto, that's the one thing that's found product market fit is these stable coins. I just saw the Bridge acquisition by Stripe. I mean, that's a big point right there. That's something like a signal to look at. And the way I see it is that, yes, I think that you talk about network effects in Bitcoin a lot. Dollar has a pretty strong network effect. And now these stable coins just improve accessibility. I mean, you had people like Paul Ryan talk about also, this is a way for us to kind of increase dollar accessibility and improve the dollar stance and the global stage with stable coins. And so it makes a lot of sense to me that that's going to keep growing. But the problem is that it still lacks, it's not a store value, right? That's what Bitcoin has that all these stable coins don't have, because it really is just like a wrapper for fiat, and they're going to keep debasing their currencies. And the other thing that stablecoins have that people need to think about is you're still trusting a centralized issuer. I mean, we saw the Silicon Valley Bank collapse. What can happen when Circle holds all of its reserves in one bank, and then its peg broke, and suddenly it was like, oh, this is actually really centralized. You're trusting this, private issuer of these dollars, so to speak, these crypto dollars is how Nick Carter would describe them. But it kind of depends on the reliability of the issuer itself. And this is where you get into the conversation of CBDCs, because they're like, well, it shouldn't be a private issuer for these digital dollars. They should be a central bank backed dollar because we are the most stable issuer. You can trust us. We have a money printer. There's no liquidity risk with us. We can hold the reserves at the central bank. And so this is kind of this conversation that's been developing over many, many years. But to me, you still can't replace Bitcoin because Bitcoin is that store of value, right? It can't get manipulated. It doesn't have a single issuer. It's decentralized. And so I see them growing over the same time. You got these stable coins, you got the Bitcoin. But the problem is that like over long periods of time, the people who adopt Bitcoin, their purchasing power is going to go up over time. And it's like that thing you always hear where if your neighbor is getting richer, everyone notices, right? So the people that hold Bitcoin over time, if you're holding stable coins and your neighbor is holding Bitcoin, you're going to look over your neighbor who's living a good life, going on multiple vacations, and then you're going to continually get poorer over time. And eventually you're going to be like, well, why am I holding these stable coins? Even if they're faster, even they're shiny wrapper, I should probably hold some Bitcoin as well. And so like that's kind of like that law that you spoke of where the good money gradually will take out the bad money, but that can happen over a long, long time. And that's kind of how I see it happening. I see the dollar kind of being fine for a long time and then Bitcoin kind of in parallel with it. And then I see like weaker currencies really fading off. Mm-hmm. And then at the end, it's like, I think just more and more people will recognize Bitcoin as superior because it actually holds its value.
What's interesting to me is Bitcoin's kind of promise, obviously, is electronic cash, right? And it feels like right now Bitcoin has won as a store of value. It is the dominant store of value coming out of this kind of digital crypto world. Does it need to become a transaction and medium of exchange and kind of a payments type technology in order to fully reach its promise? Or if it just becomes kind of digital gold, is that still a win and we can kind of claim victory and we should be happy with that?
Well, I think even if Bitcoin allows people to save in something that's free of debasement and that can't be manipulated, I think that is a win. But I think if you look around the world, even today, I mean, yes, in the Western world, primarily a store of value. I mean, that's how we see it. But there's other people around the world that use it as medium of exchange. I mean, in people in authoritarian regimes who are censored, they use it to transact. There's people in Africa who use it to transact quite frequently. There's people who have really high remittance payments that use it to transact. It's not the dominant way that people use Bitcoin today, but they are using it as a medium of exchange. It works as a medium of exchange. And then there's different scaling solutions that are happening, Lightning, and I think that's going to keep accelerating over the years. Bitcoin's still kind of young in that second layer scaling solutions for improving the transaction speeds and things like that. And then there's like developments like eCash that people couldn't have thought about, like developing with Fedimint protocols that have different trade-offs in terms of privacy as well as this transaction speeds that allow Bitcoin to be used as a medium of exchange. So I think that we're just going to see like developments happen over the next decades or so of how Bitcoin can improve as a medium of exchange. But again, like the biggest problem Bitcoin solves right now is being able to save something that's free of debasement. And that's a huge problem that every corporation, every individual faces right now. And Bitcoin is serving that very well as a store of value.
You recently talked about macro models that fail to incorporate future policy interventions are basically breaking.
Yeah.
And so it's, I always laugh that the Fed has this like impossible job. I'm going to look at backwards data, make decisions today to predict the future. But what you're talking about here is these models that are trying to understand asset prices and GDP growth, et cetera. They can't incorporate things they don't know, right? Kind of these future interventions. So explain a little bit as to like what that challenge is and then like what do you think they should be doing maybe instead?
Today's episode is brought to you by Zappo. Picture this. Every time you trade Bitcoin, the spread determines how much value stays with you. That's why securing top-tier Bitcoin trading fees is key to growing your Bitcoin wealth. But what if I told you that there's a platform that lets you save up to 90% on your Bitcoin trading fees? Now, here's the kicker. Not only do they save that money, they also are dubbed the Fort Knox of Bitcoin. Zappo Bank. They're the world's first fully licensed and regulated Bitcoin and banking group, and they have been delivering a unique blend of physical and digital security for over a decade. From military-grade Swiss bunkers to cutting-edge digital protocols, they've got you covered. And now they're bringing you the kind of competitive Bitcoin trading fees typically reserved for institutional giants, right in the palm of your hand. With Zappo Bank's ultra-competitive spreads, more of your Bitcoin stays where it belongs, in your pocket. Whether you're trading big or small, every move you make is designed to boost your gains and fuel your financial future. Head to zappobank.com/pomp to join. That's XAPOBANK.com/pomp.
Well, that was like, there's a really good report from AllianceBernstein that was called Dead or Alive, I think. I think everyone should check it out. It was a really good report. But they were just looking at kind of what we talk about a lot with the spending problem. And they were looking at the CBO projections. CBO projections are quite ridiculous, in my opinion, because they're out to 2054. Looking at the debt GDP, they say, hey, it's going to be like 175%. But they assume the inflation rate is going to be 2% the entire time and that there's never going to be a recession, right? And so...
Sounds awesome.
It sounds great. Sounds great. And we know, like, when you look at the global financial crisis as well as, the pandemic, how these crises can result in huge responses from the fiscal and monetary sides that just jack up the debt to GDP, like, substantially, right? And so to not incorporate any of those things and look at those projections, it's just nonsensical. So what the AllianceBernstein, there was a little paragraph that they were like, there is a secret amongst the modeling community in DC and in academia, whereas if you do any of these projections or try to make it make sense in terms of how we're going to pay for it with the CBO projections, the models break if you don't include some kind of intervention, some kind of policy intervention. And by policy intervention, they mean some kind of recession, and then there's a huge response that comes in. And so it just doesn't make sense. Like, the arithmetic doesn't make sense. And so that's like the secret that I think Paul Tudor Jones is talking about, Stanley Druckenmiller is talking about. You're looking at the discretionary versus mandatory spending over the next 30, 40 years, and then it just doesn't make sense. How are we going to pay for it? And that's when it comes back to, they're probably going to try to debase the currency. They're going to try to inflate their way out of it. And that's the other playbook that I mentioned. It's the IMF playbook, published a paper in 2015 called The Liquidation of Government Debt. They laid it all out, and that's exactly what they're doing now. And so in that environment, they're like, okay, we want to hold the hard assets. So that's what all these really smart investors are talking about now. The models don't make sense. They break. They're going to try to inflate their way out of it, and so protect yourself.
One of the investors that's doing this is Anthony Deaton. Most people watching or listening to this are not going to know who that is, but he's a very well-respected, very good investor. I believe he lives in Switzerland. I'm aware of maybe one or two interviews he's ever done. But he has a quote that he put out where he basically said, the compelling thing about gold is the risks we don't take by holding it. And so talk a little bit about that being very similar to, I think, a lot of Bitcoiners saying the reason why I hold Bitcoin is because I don't want to take the risk of holding dollars or anything else.
Yeah. So Anthony Deaton, I think he resonated with me. You brought up that interview. I mean, I thought he was brilliant. He's a sound money guy. And he was talking about gold. And so like, it's about the risk you don't take when you own gold. That's what makes it a compelling investment for him. He said, the risk you don't take owning gold could fill volumes. And that's why I own Bitcoin. And people don't understand that. They see it as such like a risk on asset, but I see it as a risk off asset. It doesn't have counterparty risk, right? Duration risk. It doesn't have, you don't have to worry about like the cash flows of the business or the management team if you're looking at a stock. All of these things, it's just Bitcoin is this asset that's unchanging. And people don't understand this when they hear about it. They're like, oh, this thing's very volatile. But really, it's very simple the way it functions. I mean, there's only ever going to be 21 million Bitcoin. It's an asset that will never change. And when you look out into the world that is continuously changing with all these different risks, Bitcoin is very unique in that way. And gold is probably its closest comparison. And so when somebody who's a little bit older, like Anthony Deaton, they might be attracted to gold and look at Bitcoin and be like, oh, this cryptocurrency, it's such a risky thing. But I own Bitcoin for the exact same reasons that Anthony Deaton owns gold. And I wonder what you thought when you saw that quote too.
I mean, you said earlier something that I think people don't quite understand, which is if you're a corporate CFO, the dollar is a liability and Bitcoin is an asset. And that's not how they think about it. They think, the dollar is this offensive thing. When you start to understand that the dollar is going to be devalued, when you start to understand that bonds, like, Paul Tudor Jones recently said he owns no fixed income.
Yeah.
I think people are very surprised by that. But it's like, look, if you look at TLT is, something I look at quite often, because over the last 5 years, it's down like 25, 30%.
Yeah.
And so you're like, okay, I get, hold to maturity, all this nonsense, whatever. But it's like, no. You are losing value holding this thing. And so in a weird way, you kind of have to have this contrarian view of the traditional assets to even understand what Deedon's saying, right? Like so many people are like, what do you mean you're holding gold? Like gold is, risky to me, or Bitcoin is risky or whatever. But then you're like, what do you hold in your portfolio? And they're like, oh, I have cash. Like I'm super safe. And you're like, wait, hold time out. Right?
Yeah. Treasury, risk-free asset.
Yeah. Risk-free. I mean, literally, right?
Yeah.
Like it is non-controversial to talk about a risk-free asset being treasuries. And you're like, well, actually, let me explain how this works.
Yeah.
And so I just think that Bitcoiners maybe, are early to understanding some of this stuff more so. But I always come back to this idea of what is it going to take for the public narrative to change, where then cash or in treasuries and stuff is seen as risky? I think that's very hard, right? Like there's still people who, if you go and you ask them for personal finance advice, well, just save your way to financial security. Like, hey man, that's way harder now than it was 50 years ago. And so maybe it's time. Maybe it's just we all get older and then we're the old people, right? Then we tell our kids or whatever. And you have to change it through time. But I do think that Deedon is unique in that he's older, but he sees something that a lot of older people don't see because he's had to change his mind about fiat currencies. Where it's much easier, I think, for young people to be what's this new thing? I'm kind of more open-minded. You're more mentally flexible. And so you go and you do the work.
Yeah. Maybe it's some more pain for bondholders, right? I think thinking about things in real terms is something that people don't think about either. Taking into account, yeah, okay, I have a bond. I protected the principal and earned the interest. Great. But did you actually outperform inflation during that time? No, you lost out in real terms. I think especially people that might not be as more sophisticated don't really think in real terms. Mm-hmm. And that's so important in this world that's more inflationary. And that's, I think, the big underlying theme is we are probably entering this more inflationary world. And when you think about portfolio allocation, AQR Capital put out a really good report on this a couple of years ago, just looking at how the correlation changes between bonds and stocks in inflationary environments. When in the past inflationary environments, they go positive, right? And so all of modern portfolio theory is built around this inverse relationship between stocks and bonds. Bonds are able to be that buffer when stocks fall. Fed cuts rates, bonds rise, kind of eases off some of that loss for the portfolio. In inflationary environments, that's not the case. They actually move together. And so that's what we saw in 2022. We saw them both crash, and that had everyone scared because they're like, okay, what do we do now?
Where do I hide?
We haven't seen this in 20 years, right? But AQR Capital he was like, the weird thing has been the last 20, 30 years where interest rates have just gone straight down. And they have been moving inversely all the time. But really, when you zoom all the way out, they actually, for a lot of the times, they move together. And so there's just this regime change where people have to look for alternative investments to diversify now if they think we are entering this more inflationary environment. And so that's my base case. When I just look out into the world, I see more conflict, deglobalization. I see the demographic situations. I see the spending. All those things are all inflationary. And so if we are entering this inflationary environment, you have to change the way that you diversify your portfolios and how you, reduce risk by enhancing returns. And I think nothing is better than Bitcoin. And Bitcoin has shown that over the last, 10 years, you could say.
When you do the calculation, I call it, kind of like napkin math on, okay, I'm going to calculate the real return of stocks, or I'm going to calculate the real return on bonds. What is the number that you use for the inflation rate? And what you're really trying to get at is right now they claim that it's 2.4%. There's base effects. There's, the measurement of CPI. There's all these things that kind of feed into it. Do you have a number that you just say, hey, this is the number I'm going to use, both in terms of maybe it accounts for the current situation, but also I think it'll be a fair number to use to evaluate, kind of forward 10-year returns or anything like that?
I look at the growth rate of the money supply, which has been historically 7 to 8%. So, and then that's increased, in different parts. But if you really stretch it out, it's usually around 8%. So I think that's actually the right rate that you should use for the inflation. I mean, we know that CPI has its problems with its methodology. I don't think it accurately reflects the rate of inflation. I think the best way to think about it is that inflation is a monetary phenomenon, and that you should look at the rate of the M2 money supply growth. And so that's about 7 to 8%. So I think that's actually your hurdle rate. And then if you're thinking about even further, like it's kind of like for businesses, it's like you're an investment manager, it's like the S&P 500 almost. Like that's kind of your hurdle rate too, because that's like another option. But if I'm just thinking about like inflation, that's what you should be beating. You got to beat 8%, and so every year. And so there's not many assets that have actually been able to do that, and Bitcoin is one of them.
Now, when you use that number, obviously during the pandemic, when the official number spikes to over 9%, let's say, are you thinking, okay, the official number is 9, so add another 7 or 8 on top of that, and that's your real number? Or like, how do you think about these like spikes? And the reason why it becomes interesting is if you think that the world is going to become more inflationary because of the debt problem, then actually 7 or 8 is what it's been doing, looking backwards, but looking forwards, maybe it's actually 10 or 12, or, some higher number.
Yeah, I mean, if there's a huge jump in it, like you have to take that into account. I mean, you got to understand, like people even talk about the M2 money supply growth year over year going negative recently. But again, if you look at it since 2020, it's still up 40%. Like, yeah, it's dropped a little bit over the year, but you have to take into account that huge increase over the last 4 years. And so that definitely changes. Specifically, I mean, that's what Michael Saylor had a really good presentation where he talked about this, because he kind of pins it like since they did the MicroStrategy Bitcoin playbook, which is like August 2020. And that's when he saw all this huge M2 money supply growth. And it's like, what has outperformed that over that time period? And it's really just like Bitcoin. I mean, there's certain individual stocks that you can pick, but again, that's tricky for people to do. I mean, they have to understand like what they're investing in. They have to do the research to pick those like individual stocks. And then there's all those risks that I talked about, like business risk. But yeah, Bitcoin's one of the only ones that have outperformed since August 2020 when you look at the M2 money supply growth. And so if you haven't been beating that with some of the other investments, you're losing in real terms. So it's one of the things that makes Bitcoin such an attractive asset, just how much it compounds every year, that it can actually outperform the rate of currency debasement that's happening. If we are entering a period where they're going to keep doing that, it's probably going to happen at a faster and faster rate. And so you want to own something that actually will protect you.
You've previously said that the risk reward for Bitcoin is second to none right now. We talked a lot about the reward side. What do you think the big risks to Bitcoin are? And one of the things that always becomes interesting to me is like, I think Bitcoiners are pretty critical of Bitcoin and try to think about, hey, what are the things that we could do to improve it? But like, what do you think are the 2 or 3 biggest risks right now?
I think the risks really with Bitcoin are like self-inducing. People have said it before. It's more like a critical bug or something like that. Anything that kind of threatens that 21 million number. I think if that ever comes into doubt, then this experiment is going to get put into doubt. It all comes down to like 21 million. So if something happens, some kind of critical bug, it is software, so something like that can happen. Now, I think we're kind of past that. That risk is getting lower and lower over time. And so I'm not as worried about it. But again, software, something could happen. So that's always a risk that's there. Other risks, are more like, can just delay things. Like it's more like the on and off ramps can make it harder to access it. There can be like, heavily being taxed. You kind of see that some countries are taking different approaches to taxing it heavily, which could kind of hinder its adoption. But it doesn't stop Bitcoin. That's the thing. You saw Italy kind of increase its capital gains tax from 20 to 40 something the other week. And so these things can kind of help hinder Bitcoin's adoption. And so that could be a risk if you're an investment, manager and you have a more like short-term thinking, like, hey, I want this to do well over the next couple of years. If they start to do things that hurt the adoption of Bitcoin by regulation, by enforcement, shutting down on-ramps and off-ramps, that could kind of delay things a little bit if you don't have a really long investment horizon. But that's not really a risk for somebody who's just like a young person who just wants to save in something that's not diluted by currency debasement, who has 30, 40 years, because, that just kind of stops it from happening in one jurisdiction. But Bitcoin's a global phenomenon. And I think it's just an idea whose time has come, given the amount of currency debasement happening.
What's fascinating to me also is it's really forcing an entire generation to think long term.
Yeah.
When I see certain people come out and they're like, oh, what's going to do next week, next month, whatever. I'm like, oh, you must be new here.
Yeah.
Right. Most of the people I know have been around for a long time. They're now literally thinking decade plus timelines. And the people who I probably respect the most are thinking 20, 30, 40, 50 years out. And then, of course, Bitcoin's got like weird cultural things around it. People eat certain food. I always joke that like there's a certain subset of Bitcoiners who want to like go outside naked and like sun their balls or and whatever. like there's all these like different like cohorts, whatever. But I do see a lot of people who they start to think long term in their portfolio, and then they start to think long term in their life. And it's this very like fascinating thing of maybe actually one of the greatest gifts that Bitcoin gave to the world is just like think long term.
Yeah.
And for young people who tend to be more, excited about Bitcoin than older people, like they still have time on their side.
Yeah. And I've noticed it in my own life. And I think about fiat currency. It makes sense when you look at it the other side of things. So like if you live in a jurisdiction where the currency is inflating like 100%, I mean, how can you think long term, right? You're just kind of worried about like the grocery store prices increasing the next week. You have to keep thinking really short term. And all the greatest things that we built as a civilization has been like long term investments, projects, building businesses, like solving things, solving problems that take like these innovations that like, oh, I never thought this was going to work, but I'm going to invest some capital and just like see if it could work over the next 5 to 10 years. That's how we get like some of these like really big technological breakthroughs. And so like thinking long term is, I think, really, really good for society as a whole. And I think that sound money does that to people. And so it's one of the reasons I'm so bullish on Bitcoin, because I think it's like sound money for the digital age. And it's going to get people thinking more long term about how we can solve these like really big problems in our society. And I've seen it myself. I know you've probably seen it yourself. And I'm excited to see that kind of like trickle out into like the corporate world, nation state level over the next. I mean, I'm just kind of front row seat right here, just kind of watching Bitcoin spread. And it's that's one of the reasons I'm so excited about it.
I do love this idea that like the critics eventually join our team. Right.
Yeah.
It's like, like the Larry Finks of the world, like he's the CMO of Bitcoin now. Right. Like he's doing a great job. Like we love him.
Dude,
right.
Doing a pretty good job.
And there's this weird thing like the messenger really matters. And so he's maybe saying the exact same thing that Bitcoiners have been saying forever, but like it actually matters that Larry Fink's saying it, and so like the team expands over time.
Yeah.
And very few people I know were into Bitcoin and now aren't. But there's a hell of a lot of people who weren't into it that now, kind of join Team Bitcoin. And that seems to obviously be a great tailwind. Before I let you go, one thing I'm always interested is what information do you consume on a daily basis? Like you wake up in the morning, what are you looking at Bitcoin or investing wise, like data or information? What sites are you going to kind of consume content? What are those things that you've kind of filtered through and say, hey, look, I think these are high signal and things that, really kind of I learn from?
Yeah. I wake up and I go to the mainstream media sites too. Like I go to like Financial Times, Bloomberg, Wall Street Journal, and I just kind of see what everyone's talking about. Mm-hmm. And then if there's like a Bitcoin article or anything about digital assets, I'll like read it and see what's going on there. Then I go on X. I think like X is so powerful because it's just like a hive mind of really brilliant people. And I think like if you look at people's following list, I think that's one of the biggest alpha you can do. If you think somebody's really smart, just look at who they're following and then follow them too. And I think I learned so much from just like the community there. And so I usually like bookmark things, like reports that come through, like whatever on X. And then, there's all these different firms throughout the industry that have put out great reports and content and research. And I try to read like as much as I can. If there's like a really good report, well done, took a lot of time to make, I'll read it. I'll read everything. No matter if it's just like Bitcoin specific or digital assets or about stable coins, I'll read anything that people put out. And so like, I'm really interested right now in like, so like BlackRock, for instance, like they put together those slides and they're going around, like you said, I mean, it's crazy. They're going around like a worldwide tour teaching institutional investors about Bitcoin.
With Bitcoin memes, right? Like
Bitcoin
the things that Bitcoiners
yeah.
have been saying for a decade.
I mean, I try to read everything and I'm like going through their, slides that some of them leaked on, X, and I'm just like, this is crazy. Like, and I'm learning some things like how are they like sending the messages, but it really is just what Bitcoin has been talking about. Another one is like Bernstein from Alliance Bernstein. They just put out like 160-page what they call Black Book. This is one of the most respected research firms on Wall Street, all about Bitcoin and the institutional adoption era and why Bitcoin's going at 200K by the end of next year. This is Bernstein. I mean, so like I get really, I try to read all different types of perspectives on it from different people, from Wall Street, mainstream media sources, industry specific firms, as well as X and just like regular, individuals like blog posts, because that's how Bitcoin content really grew back in like 2017, 2018. It was like a collection of Medium posts, newsletters, podcasts. And not to say those people are brilliant too. So I try to read everything. It was like one of the first things I did at Swan was grab all the Bitcoin content that was out there from YouTube, blog posts, articles, reports, and I archived them all. And then I just like made a different curated content and an entire educational platform of the decentralized content of Bitcoin. And so you can learn so much from all those different mediums. And it's just like, really, how do you want to learn about it? And so for me, I'm trying to like, I try to read everything. I try to like digest everything. It's almost impossible now. But I learn from everything. So I guess I wake up, it's just constant reading.
That's a great way to learn, right?
Yeah, that's how I like to learn.
And then I find that after I read a lot, then I go talk to people and they kind of help me filter like, oh, that was dumb. Okay, I'm gonna forget that thing, right?
Yeah,
like,
no, totally.
Oh, the guy at Bernstein, come on, man. The 165 pages or whatever, like 159 were great. Like those 6 pages,
totally.
I gotta forget that part.
Totally. I like reading. I like going directly to sources too. There's a lot of articles that talk about, lawsuits or something like that. I like to read like I'm the guy who's like reading like the 180, page lawsuit from the SEC. Like I like going digging into those and then even like looking in through the footnotes, because that's where you see some of the real like gems, is where you read the footnotes of where they got the information and then you dig into that and you get into these rabbit holes. So I think like going to find the original source material and then giving your own opinion or like developing your own opinion before going on Twitter and just like finding a thread. I think that's like generally a good idea to do. And so I recommend people go to the original source material. That's always good.
Bitcoiners are very smart. Every once in a while they get too excited, right?
A little bit, yeah.
And there is like something that goes super viral, and like we were talking about one earlier. Like, is that true? Is that not true? Okay,
totally,
let's go try to figure it out.
Yeah, I've been guilty too. This is more like after 7-8 years. Like I've learned, like I'm not going to trust that guy. I got to go to the original source material, and then maybe he's right, maybe he's wrong.
Amazing. Where can we send people to find you on the internet?
Yeah, I'm on X, so at Sam Callah, SamCallah. Share my thoughts there. I also do a newsletter called The News Block, where we just try to break everything down every week in under 10 minutes, like a block. Usually we curate a lot of things on there. So we talked about like where I get my content. I usually just make it easy for everybody. So it's all right there for them. So I do all the work for you. You can just read all the links to all the reports and stuff. So check it out. It's the Newsblock at substack.com.
Newsblock.substack.com.
Yeah, the Newsblock. Yeah.
Okay. And the Newsblock.
Yeah.
Make sure you tell them exactly, because if I mess it up, they're never going to get mad at me. The Newsblock.substack.com. And I see what you did there with 10 minutes and the block. That was clever.
Yeah. Yeah, there you go.
All right. Well, thank you so much for doing this. We'll do it again in the future.
Yeah. Thanks, Pomp.
What's up, guys? I hope you're enjoying this episode, but I got a quick message for you. I just released my very first book. It's called How to Live an Extraordinary Life. In this book, there are 65 life lessons that I've picked up over the years. These lessons will teach you about money, investing, relationships, work, health, happiness, and much more. In this book, I wrote letters to each one of my children, and I tried to share those life lessons with them. If you pick up this book, there's 3 things that I can promise you. The first is that it is very concise. The audiobook is only 3 hours. You can listen to it on a long drive or on a rainy afternoon. The second thing is that you're going to learn something. It's worth the price of admission just for the lessons themselves. And then the third thing is it will make you think more deeply about your life and how you try to live it. So go pick up How to Live an Extraordinary Life today. It's a quick read. It's very impactful. It's very concise, and it would mean the world to me for the support. Go check it out today on Amazon, Barnes & Noble, or wherever you buy your books. Hardcover, audiobook, it all works. Thank you so much for the support, and I'd love to hear what you think about the new book.